What's up, you guys? Zoeb here from OneGlanceTrader.com, and welcome to part 4 of my candlestick pattern trading crash course. And if you're brand new, you can click the link in the description, which has the playlist to the full 6-part series, which you can watch all in one go. So just to give you a quick recap, this candlestick trading pattern course looks at my OGT price action indicator, which has 5 powerful candlestick patterns. And in the first part, we went through the global settings of that indicator. And in part 2 and 3, we went through the first 2 patterns, which were the pin bar and the engulfing bar. Now in this video, we're going to be looking at the breakout candlestick pattern, which is the inside bar. So the inside bar is a reversal continuation candlestick formation. Similar to the engulfing bar, it is a 2 candlestick pattern where it is the opposite of the engulfing bar. So the first bar, effectively, as you can see here, this massive green bar engulfs the next bar, so the inside bar. And the way that this kind of candlestick pattern is traded is that most people use the high and the low of the preceding bar, or in this case the mother candle in this particular example, as the kind of a breakout zone. Some people use the breakout of the inside bar. However, the way I particularly use it and the way that is traditionally taught is to have the high and the low of the preceding bar as your main breakout, and when price breaks through one of those levels, that is the direction that we want to consider taking a trade with. And in terms of the settings of the OGT price action indicator, again, it's absolutely free. Link is in the description to pick that one up. Because it's not a trending or a counter trend kind of pattern, you can trade it as trend continuation or reversal. My suggestion is that you take the filter off and keep it as false, so therefore you will see every single signal that comes on the chart. In terms of the inside bar settings, similar to the engulfing bar, they're exactly the same. So what I like to do is check that the mother candle, so the first of the 2-part candle, is 4 bigger than the previous 4 candles. So that's the first piece there, and then the body of that engulfing preceding bar is more than 70% of its actual range. And with everything, you can the bigger you set the percentage, the more reliable signals, in my personal opinion, you get, but the less number of signals you're actually going to get. And that's similar to the quantity of the previous candle range as well. So the bigger the number, the more reliable but less signals you're going to get. So again, practice with that, experiment with what you think works well for you. And again, this is just what works well for me and what I use when I trade. And in the examples I'm going to show now, it uses these these settings. So as I said, because it's a breakout candle, and whether that is counter trend or trend, I've got 2 examples to show you. Now, firstly, the inside bar kind of signal on this chart is signified by this snowflake looking symbol, which is what we've used to distinguish an inside bar. And as you can see, we've got this massive big bearish red bar followed by the whole body of the next bar engulfed in the preceding bar. So that's considered as an inside bar. Now, in this particular example, as you can see, I've got the trend settings on, so it's only showing signals that where all these moving averages are pointing in the right direction. And again, if you've not checked out the global settings, I strongly recommend that you do so. It goes into that in a lot more detail. And as you can see in this particular example, we've got 3 inside bars together in this massive candle here, which, in my personal opinion, the more inside bars that you get, the more reliable the signal is. And we're also seeing here that the EMAs are also, again, aligning, but look how far, by the time this bar is formed, they are still expanding apart. And as with Guppy's moving average, this is what it's based over, and I'll link to this inside the description in the top right corner, is the more that they're apart, the more chance of a strong trend continuation. So we've got 1, 2, 3 bars that are inside bars. Then we've got the EMAs pointing downwards, fanning and expanding apart, giving us determination of the strong trend. Then what we've got here, we have drawn two lines, one at the above and one at the low of this massive range bar here. And what we're looking to do now is wait for price to break one of those levels. But because we are going short, we're only really looking at for it to break the short side of this pattern. Once price breaks short, you can see here closes above here. We will get into an entry. Sorry, we had a bit of a drawdown, but then price continues to break lower. And look at that move over there, massive downward push onto there. And as you can see here, that this would have worked out as a nice trade, depending on where you put your stop loss and your reward to risk. So hopefully that gives you a good example of an inside bar on a trend example. And then very quickly, sorry, I'm just going to give you an example of a counter trend example. So again, we've got the inside bar here forming here, distinguished by this snowflake candle. We've got this preceding bar here engulfing the next bar from the whole body. And again, you can see here that we've had 1, 2, 3 candles inside this whole bar. Again, the more inside bars you get, the better, in my view, that the reliable the signal is. And because price is compressed and squeezed and wants to break out of its kind of range. We've also got the price retracing away from a Bollinger Band, as we talked about in some of the previous series in this candlestick pattern courses, retracing away from it. And then, as you can see here, I've drawn a high above here and price has broken through that. As soon as it breaks through, we then enter to go long here. And as you can see here, price continues to make a massive move up. So inside bars are very powerful for trend continuation and counter trend moves, as you can see here. And again, the good thing about the OGT price action indicator is that you don't need to sit and wait in front of a chart. This is all programmed in, and you can get your push notifications or your desktop or your sound notifications to be alerted when an inside bar comes into play. So I really hope that you've enjoyed this series on the inside bar. Again, click the playlist below if you want to go check out the previous videos. Right now you'll see the thumbnail of part 5, which is the Doji, the indecision pattern, and I shall see you guys in part 5.